everybody. Warren Buffett has been selling equities and raising cash like never before.
Yes, he shocked virtually everybody on Wall Street by selling 389 million shares of his number one holding, Apple, in the second quarter of 2024. But since December of 2023, the first half of this year, he sold an alarming 56% of his entire Apple holdings. He has 400 million shares left, but for how long? During the second quarter, he also dumped his entire position in Snowflake for almost $1 billion, closed out his position in Paramount, and reduced positions in Chevron, Capital One, T-Mobile, Louisiana Pacific, Liberty Media, and Floor & Decor.
So huddle up, team. We are John and Tara Thorman, your financial success coaches, and we help entrepreneurs and influencers, business leaders, and the self-employed professionals achieve financial freedom faster so they can enjoy it longer. And we'd love for you to join our team by subscribing to the channel and crushing the bell icon and the like button so you'll never miss a video.
So if you thought Warren Buffett was done selling stocks, not so fast. Check this out. To kick off the third quarter, in just 12 days during July, Berkshire Hathaway sold 90.4 million shares worth $3.8 billion of his number two holding, Bank of America. That actually now places it at the number 3 position behind American Express. What the heck is going on with Warren selling all his favorite stocks?
Right.
And this is super interesting, okay? Berkshire Hathaway have been net sellers of stocks for the past 7 quarters in a row. That's right, since the Q4 of 2022, they've been the net sellers of equities every single quarter. And it's just grown and getting bigger. Look at the slide here. We went from 14 billion in Q4 of 2022 to 75.5 billion just this past quarter. It's unbelievable. So, you know, they say actions speak louder than words. So while Buffett is known for buying wonderful companies at a fair price and having a favorite holding period of forever, something has him behaving very differently lately. He's selling stocks and holds the largest cash position of any company in the entire world at $277 billion. His actions are deafening. Perhaps for Warren, his favorite holding period of forever has arrived, or maybe it soon will. So it's time to sell and be liquid, flush with cash. I'm not the only one questioning Buffett's money moves here. Elon Musk commented on his $277 billion cash position, calling it wild, and suggested it will change when interest rates come down. But Elon Musk said something far more ominous and foreboding following the news that Berkshire Hathaway sold all this Apple stock last quarter. He said Warren Buffett is clearly expecting a correction or otherwise simply cannot see better investments than Treasury bills. So why is Buffett choosing T-bills over Apple and Bank of America stock, his 2 largest positions? And what does he plan on doing with this enormous stockpile of cash? So let me give you my thoughts, and then I want you to give me your thoughts in the comments below, okay? So during the Berkshire Hathaway annual shareholder meeting, May, Warren commented on selling a little bit of Apple in the first quarter. And what he said was, his reasoning was for tax purposes, okay? Right now, taxes are at historical low rates. They're 21% for corporate taxes, but they could likely be much higher. So Warren figures shareholders would appreciate paying taxes at a lower rate than a higher rate possibly in the future. And this is, got some real merit to that point because Joe Biden's budget proposal for next year suggested raising the corporate tax rate from 21 to 28. And it's been much higher previously. So there is some validity to this statement. But you know what? I'm not buying it. I don't think it's his real number one motivation because of something Warren Buffett said himself. More investment sins are probably committed by otherwise quite intelligent people because of tax considerations than from any other cause. So no way is tax considerations his primary motivation for selling all this stock. Thought number 2, maybe he's just rebalancing his portfolio. This is a very disciplined investment move, highly recommended. You want to do that. Given the significantly overweighted positions of Apple and Bank of America in the investment portfolio, rebalancing makes sense. So this could be part of the reason, but I don't buy it as the primary reason. Buffett believes in concentrating his holdings to improve returns. He says diversification is for people who don't know what they're doing. So I don't think rebalancing the portfolio is his number one motivation either. Of course, it could be sector rotation as a motivation. Perhaps in an economy of higher inflation and threatening recession, these stocks, Apple and Bank of America, are in industries that might be more vulnerable. And so his thought is to do some sector rotation, put a little more weighting in some other industries, or maybe add some other industries that he doesn't have that could perform better in that kind of a macro environment. This could justify some of his moves. It is a sound investment principle, but I don't think it's part of his reasoning here. I don't think it's a big part of why he's selling all these stocks. Thought number 4. Market, economic, and political environments. Now, these are more short-term situations. And of course, Warren Buffett doesn't have a view on what the market's going to do. Nobody has a crystal ball. I don't see this as a primary reason either, although I think it is a significant concern. That's not how Warren Buffett operates. So I think this is legitimate concern about what we're heading into with the election this fall and economic indicators and all of these issues about market and being overvalued. I mean, it's at a high PE multiples and all these situations. I think it weighs super heavy, but I don't think it's the number one reason yet. So what is the number one reason? Well, I'm looking at something Warren Buffett has said himself previously. He says, we don't buy and sell stocks based upon what other people think the stock market is going to do. I never have an opinion. That's what Warren said. Right. But rather upon what we think the company is going to do. I think it was time for Warren and Berkshire Hathaway to sell Apple and Bank of America because of what they think those companies are going to do going forward. I think the prices of those stocks are looking way overvalued based on their recent performance and their future prospects. So this leads me to think that the companies themselves are not going to perform very well going forward. And if we look at it, Apple is facing some serious headwinds, right? Their core products are stagnant in terms of revenue growth, and the stock price itself got a big bump in June when Apple announced that they were getting into Apple Intelligence. They're going to start rolling out their devices by the end of the year with this new Apple Intelligence, and AI is all the rage. And so the price got a big bump. And I think at a multiple of 34, a PE multiple of 34, that's just looking too expensive with all of the headwind and the potential challenges of the market and everything. It's like, you know what, it's time to sell. Like, this is overvalued. So they're taking some profits off the table, and they're playing some defense. They're playing more defense now. You got to play offense and you got to play defense. It can't be just all offense all the time. Are you playing defense? Have you added some defense into your mix? I want you to consider this. According to Paul Tudor Jones, who's a multi-billionaire hedge fund manager, he says defense is 10 times more important than offense. And Bear Bryant, the legendary football coach, said, offense sells tickets, but defense wins championships. And in the maybe immortal words of Warren Buffett himself, he has 2 investment rules, right? Rule number 1, never lose money. And rule number 2, never forget rule number 1. So he's positioning himself to not lose so much money. In my experience, most people ignore asset management and risk management. They just set it and forget it, right? They just set up their 401k plan and their initial asset allocation, and then they don't even review how they're doing. So many people set it and forget it. And I think that's a terrible way to go. Those are big mistakes. So here's something you can do to fix it. Oh, but first, we're excited to announce that we just opened a special beta release of our new financial coaching program called Rapid Financial Transformation Training Camp. This 12-week online coaching program is going to help you learn offense, defense, and special teams so you can rapidly transform your personal financial life and achieve your financial freedom faster so you can enjoy it longer. Now, if you're ready to seize control of your finances, confidently build assets, and put an end to fights with your spouse over money and endless anxiety, then I want to encourage you to register for this program right now. Limited time during the beta program, it's 70% off, and you can take advantage of that with letting us know. I'll put some description in the box below. Okay, back to Warren Buffett and Berkshire Hathaway. What do you think they're going to do with $277 billion of cash?
I don't know.
I mean, that's a mind-boggling amount of cash sitting there waiting to be utilized, right? Well, we know one thing. He's got it in treasuries, right? T-bills, so he's earning interest. And the T-bills are paying, let's say, 5% interest, so he's earning way more than what he would get in dividends from Apple and Bank of America. Apple was paying 0.44%, and Bank of America paying 2.6%. So that's a win in the short term for Berkshire Hathaway's. But the real purpose of that cash is to go back to what they believe is an investment principle, which is to buy wonderful companies at a fair price. Problem is, there are not any right now, right? The market multiples are way too high. So they're sitting on cash as a war chest, getting ready to pounce, okay? As soon as they find an opportunity. So if something drastic happens and a really wonderful company gets its price cut in half or more, then you can maybe start seeing Warren Buffett scooping up some deals. They have the liquidity to take advantage of opportunities that are definitely going to be coming. Are you ready? What sectors or what specific companies do you think Warren Buffett would want to buy into? You got any ideas? They got a lot of cash. Let us know in the comments below what you think some good sectors or good businesses would be for Berkshire Hathaway's to start buying. But how's your liquidity? Let's get back to you. Do you have an opportunity fund so that you can pounce on deals when they present themselves? Let's apply what we've learned from Warren Buffett's behavior here to your own investment portfolio, okay, and retirement accounts. Number one, I think it's pretty clear you can't just set it and forget it, right? Things change, okay, either outside in terms of the economy and the geopolitical situation, or they change inside with changes of management, product, becoming obsolete or new competitors. I mean, there's all kinds of change, right? You've got to respond to that change accordingly. So do a review. Grab your 401k statement, okay, and take a look at it and see what's going on, and have maybe work with a coach and figure out what you should be doing. Maybe for the first time, understand what you have and what's going on. Number two, asset allocation. This is an important discipline, and what we want to encourage you to do is look at non-correlated asset classes. It's not just stocks, bonds, cash, and a little real estate, okay? There's way more opportunities to diversify your portfolio. Choose 7 to 8 maybe non-correlated asset classes and get defensive. Protect yourself. So if one sector tanks, the other ones don't, right? That's the idea here. Oh, and did you know that almost 20% of all the gold ever mined is held by central banks?
Well,
Could you imagine if Warren Buffett changed his tune and started buying some gold or silver? I mean, Michael Burry, right, the famous guy that shorted the housing market in 2008, he bought gold in the first quarter, and then he just sold it in the second quarter when the gold prices spiked. So what if you bought some gold and silver? It's a non-correlated asset class. Number 3, sector rotation. Consider your sector allocations. Are you too heavy in IT and have got nothing in utilities, right, or healthcare? Look at how you can change up your asset sector rotation. And then, of course, remember diversification. Within each asset class, you want to diversify between different companies and different geographies even. Number 5, know and understand what you're investing in, okay? That's really the best solution, is choose sectors, choose industries and companies that you know and love and will be engaged and follow with. Number 6, work with a financial coach. Warren had Charlie, right? And he had a team of people. He has a team of people still to help him and bring him new opportunities or maybe show him a blind spot, because we all have them. We're here to help you achieve your financial freedom faster,
so you can enjoy it longer.
That's right. So consider hiring us as your coach to help you perform at a higher level and reach your goals. Buffett's clearly in a selling mood. And when will it end? Who knows, right? How much more will he sell? Could you imagine if he's just getting started and the third quarter is going to be the big sales? Like, oh my gosh. Could you imagine what that would do on Wall Street? Woo! What would it do to your 401k plan? I mean, don't do nothing.
Right.
Okay. I know that everybody's talking about, when it's very volatile, don't do nothing. Well, we had some volatility and it's, come back.
Right.
So maybe now is the best time ever for you to take a look at what's really going on and how to position yourself for going forward. You could be like Warren Buffett and start selling some assets and raising some cash. If this video has brought value to you, I hope it does, because we want to really challenge you to look at your situation and make improvements, right? If it's brought value to you, please go ahead and like the video and share it maybe with somebody, but make sure you subscribe to the channel, because we don't want you to miss a single video. See you next time.